Hey, good afternoon, traders. Want to talk to you here about repairing a bad trade. As you can see here, I have up the MES, the micro ES futures. I have this on a 4-hour count, 4-hour chart, 4-hour candle. I'll get it out in a minute, so I can show you the whole week here on this one page. Early in the week, as you can see, it was trading, as high, went as high as about 42.07. Well, I believe it was on Tuesday when it was right around here at the 41.70 mark. I went long a futures contract. It had pulled back from the 4,200 on Monday down to 41.70, and I said, I was looking for a rebound. So I went long the 41.70 contract. Well, as you can see here, on Tuesday, it went down from like right here at 41.74, and this 4-hour bar, it went down to 41.09. Made quite a dramatic move down. So what I did, when it started selling off, it didn't sell off, this is a 4-hour bar, so it didn't sell off, in a matter of minutes, but it started to make a major move down. So what I did to play, I'll say defense, since I was long the 41.70, I went ahead and sold the 41.70 call against it that was going to expire that day. With these MES futures, as you can see, this is going out, this is Monday, May the 8th. They expire every day, so you can sell calls against your long positions on a daily basis. So I sold the 41.70 where I was long, and maybe collected like 4 points, and each point's $5. So I collected $20. Well, it expired worthless that day, so I had reduced my cost basis from 41.70 by $20, which is 4 points. So now I, in theory, are long at 41.66. Okay. Well, on Tuesday, as we'll go back here to the chart, or Wednesday, I should say. Wednesday, it traded up around 41.44. It rebounded some. So I came in on Wednesday and sold the 41.70 again. I thought maybe it'd rebound all the way, and I collected another $15 or $20, and once again it expired worthless. So about Thursday here, as you can see, we sold off down to 40.70. I was down 100 points on this one particular contract. I had scalped hundreds of contracts during the week. Overall, my week was green, believe it or not, but I'm showing you here how I can repair this one contract. On Thursday, when it went down here really low, down to 40.70, I was out 100 points, $500. Well, I could have sold the 41.70 call for Thursday, but I probably would have collected $1.5 or something like that. That's not worth it. So I went ahead and dropped down to around 4,100. I dropped it down pretty low, because I want to pick up more premium. I want to pick up $20 or $25. That's the goal, is to try to recover $20 to $25 a day when you're down as much as I was. Now, as we all know, as you can see here on Friday, after the economic announcement come out, things, we opened up Friday around the 40.90. Then we did a big rally all the way up to the high of the day. It went about 41.64. Well, what I did is, I had sold the contract for Friday, and it was going to get called away. Well, if it had been called away, it had been called away at a loss. So as the market moved up, when it got to within about 10 points of my call, what I did is I rolled out one day and rolled up about 10 points. And I actually did that with no additional credit, but no additional debit. And then, matter of fact, I did that twice on Friday. And I rolled all the way out to May the 10th. So I'm short a 41.70 call here, as you can see, but I rolled all the way up because by rolling out one day, you are collecting the extra premium for the time value of the option. And by rolling up 10 points, I was able to roll up 10 points 3 different times. It didn't cost me anything. So that's how you can do this with the futures and recover. The beautiful thing about the futures, there's no pattern day trade rules. You can do this 100 times with a count of under the $25,000. So right here, this is I just made a little Excel spreadsheet and put it here. This is the future options, and this is just last week. I recovered $128 of by selling options that expired. I'm currently recovered $128, and being long the 4170, you can see here on Wednesday I've got it for it to be called away at 4170, but I keep the $128, so that would make that a $128 winning trade. But if you go back to the chart, actually my new all-in cost is $41.45 by taking that $128. So in theory, I'm already profitable on this trade, but I'm going to hold out because I want to make more money off it than just 3 points. But that's how you can repair a bad trade in options. So if you're not currently trading the futures and future options, you ought to come over to Tasty Trade here. They make it pretty easy to qualify for it. They have a program called The Works, and basically you can trade just about anything that they offer with The Works. So I hope you learned something here and enjoyed it.